In this video, I'm going to be answering the question of whether or not the outcome of the US election will change the financial outlook for the US moving forward. I'm also going to explain why I hold this perspective and share some of the important developing financial issues that you need to be aware of. Before I get into this question, I first want to address the elephant in the room, and that is the political heat surrounding this election. First of all, I just want to make it very clear that this channel is not politically driven one way or the other. And the whole reason for me making this video is to address some of the concerns surrounding the election and the potential outcomes and how this will or will not impact the financial issues that are already present today. Secondly, I understand that this is a very emotional and intense election, and this has caused people to be polarized to one side of the camp or the other. In my opinion, at the forefront of this political polarization that we've been witnessing has been the media. And it seems that the media has this kind of vested interest in dividing people in so many different ways, including by political affiliation. My whole point in saying this is just to not allow anyone, including the media, separate you from your family, your friends, or your loved ones. Having healthy disagreements can be really beneficial for everyone involved because it allows people to get access to different perspectives and thoughts. And for a moment, it takes us out of the echo chambers that we're oftentimes put into from social media. My 2 cents are just simply, if you can avoid it, don't allow the difference in opinions become the reasons that your relationships are damaged or lost, but rather a reason that you're able to expand your perspective and also expand the awareness that you have of the concerns of others. Lastly, I just want to remind everyone that we're all in the same boat. And while we have different situations and unique challenges, we're all subject to the difficult financial conditions that are ahead of us. Therefore, I want this to be a place where everyone can come to access important information so that they can make their own informed decisions based off of their current circumstances in order to ensure financial security and success. So back to the main question. Will the results of the US election change the financial outlook of the US moving forward? In my opinion, the short answer is no. Now, there are some aspects like tax, trade, and foreign policy that might have some marginal impacts in the short-term economic picture. However, I don't think any of these things will change the fact that we are heading towards a massive financial crisis, regardless of who becomes the next president. At this point, both administrations are really limited in what they can do to help mediate the situation that we're heading towards. More and more top-down reactive measures and huge stimulus packages are almost a certainty under either administration. With virtually no other options left other than just letting the economy crash, what choice do they have? The American people are struggling, and at this point, I don't know which one's more alarming, the wealth disparity or the political one. Regardless of what the responses end up detailing or what administration communicates those responses, I think it will ultimately come down to the government seizing more power in order to rectify the problems that they themselves and the Federal Reserve helped create. So what are some of the factors that are contributing to this impending financial crisis? One major conflict is the fact that our financial system and the global monetary system is in dire shape. Our fiat monetary system is no longer accommodating the needs of our global economy. And the financial system is so shaky because of artificially low interest rates. Under current conditions, if you were to hold your money in a standard savings account, you would be yielding between 0 to 0.25% per year. The Federal Reserve has been manipulating interest rates lower for years, and this has hurt savers and has basically forced everyone into high-priced financial markets in order to try to find some kind of return on their savings. These actions from the Federal Reserve have manifested into gigantic asset bubbles. And we can see this when we look at sky-high real estate prices and when we look at the present-day stock market bubble. And lastly, while we're on the topic, we have a debt crisis that every day is looking more and more like a debt bubble. As I've mentioned in previous videos, the US is the biggest debtor nation in the world. And if we check the US debt clock, right now, the total US national debt is over $27.1 trillion, and it's not showing any signs of slowing down. Needless to say, the US national debt is at an all-time high, but the US dollar has also lost a lot of purchasing power over the previous decades. And so is it really that big of a deal? Well, with this figure being such a big number, it's hard to put it into perspective and really understand the magnitude of this situation. But if we compare the debt number to GDP, then we can get a better idea of just how serious this issue is. Quick refresher, GDP stands for gross domestic product and is the value of the goods and services that a nation produces in a year. So here's a 50-year chart, and again, this shows the amount of US debt in relation to US GDP. We can see here that throughout the 1970s and the early 80s, the debt stayed between 30 to 40% of GDP. However, through the late 80s and into the 90s, the debt picked up to over 60% of GDP. It then stayed pretty stable for the next decade, and then in response to the global financial crisis, the debt almost doubled to over 100% of GDP. This chart only shows data up until 2019 though. So if we were to take into account new information, the US debt in relation to GDP as of Q2 of 2020 is now at 136%. If we were to plot this 136% figure on the previous chart over here, it would literally be off the charts. And if we expanded this to also include the US debt to GDP ratio in the aftermath of the Great Depression and World War II, which it almost reached 120%, in 2020, we've already surpassed this figure. So it's clear that this is a very pressing issue and it's only getting worse. So there needs to be some kind of debt deleveraging in the near future because this trend of GDP declining while the debt is skyrocketing cannot continue indefinitely. The question is whether we're heading towards an inflationary or deflationary deleveraging. So that's what we're going to be talking about in the videos to come so that you understand what is happening, why it's happening, and what steps you can take in order to protect yourselves in either economic environment. Thanks so much for watching. And if this message and the information I shared with you resonated, consider sharing it to others that you care about. And I will see you all next time.